Hello and welcome to the Trading School. We are here for the beginner, the small investor, those who are wanting to learn more about what goes on in Wall Street, how to invest, how to trade on their own. We're not here to sell you anything, nor will we ask you for anything. But let's get started here. This week we want to talk about what makes the stock price change. Last week, we talked about moving average as indicators of a trend or a change in the stock direction, when to get in, when to get out. So this week, let's talk about volume. And I've put on the screen here a volume indicator here at the very bottom with red bar, green bars. And the blue line indicates the average over a 30-day period. Oh, excuse me, this one's over a 50-day period of the average volume traded. And you see sometimes there's a spike above the average. Sometimes there's a big drop or decline in the actual shares traded. So volume is nothing more than the total number of shares bought and sold in any one given period of time, whether it be a daily time frame or a weekly time frame. In this case, we have a daily time frame on the chart. So let's look at some of the reasons why volume will change. It could be news about the industry itself. It could be a new CEO taking place or being replaced. It could be a new product that the particular company is bringing out. In this case, PACCAR. They could be bringing out a new product, new truck, for example. And most importantly, it could be a new sponsorship. And what's a sponsorship? Sponsorship is a fund, a big bank, a big institution buying a lot of shares just to get into or open the stock as a buy. So when they do that, they typically buy several shares at a time in a 1 day, 2 day, 3 day, or 3 month period, 6 months. It could take a year before they completely finish their total purchase. But also there could be news about a merger, a buy or a sale by another company. Could be a tragedy within the world itself or locally. It could be geopolitical news. And it could be an earnings report. And here we see on the chart, there's an earnings report. Here's earnings report. Here's earnings report. And also they give a conference call as to explanations of the earnings for the last quarter. It could be, in this case, let's change this over to the sector indicator. In this case, I'll look at the industrial sector, XLI. And this is not a price movement, but an index, where they're measuring all the funds, all the stocks in that particular industry of that we're looking at, in this case, industrials. And most importantly, it could be the volume increase. And that's what we want to talk about today, both buying and selling increases. So let's go back here to our particular stock we're looking at. PACCAR, PCAR. Right now I've got a year-to-date chart up. This is daily movement here. So if you look back to February all the way up through May, end of May, we had a sideways movement indicated, the highs and the lows in that movement. And then we had some buying taking place, very, very small amounts, but the stock was inching up carefully. And that's something to take notice, that if it would break out of this particular sideways movement, here, for example, if it would break out, start paying attention to it. In this case, we didn't have any big movement of volume. The green bars are the movement of buys and the red bars are sales, but they're all below the average in this case. So we had a little bit of pullback as it hit its high and pulled back. Came from here to here and pulled back a little. So then you'd expect some institutional buying taking place, but that buying did not take place until right about here. Let's see if I can show this differently. There you go. July the 7th, for example. This particular bar was a big buy by a lot of people at one time based on news. It could be industry sector moving it up. But here again, we go back into a sideways movement here. And we're still waiting for the next opportunity to buy. So if you look down here at the average, the blue line, we had big volume here taking place, which is above the 50-day average. Big selling taking place here, which brought the stock down, and selling here. Here we had some selling. But here, as you notice, and let's drill in a little bit tighter. As you notice the last few days, the last week, we had some pretty good buying taking place. I'll highlight that. So in these last few days here, we had a drawdown. We had some volume taking place here, which is up to and above the normal. And we're getting ready to what looks like cross the 50-day moving average line. As we said last week, that's an indicator as to when to buy. So it could be an opportunity. It could cross here and pull back. It could go up and keep going up. But what's important, is it going to cross this particular line? Any of those period of times you can start buying and buy into it. It could be institutional buying. It could be retail people like you and me, which is a small sample jumping into it based on news. But let me go to some other examples here. Let's look at this little company called Apple. We don't know much about Apple. Just kidding, just kidding. Here it's pulled back below the 50-day line, but we're starting to get some good buying brought in above the average. So this could start moving back up. Here's AIG, which has already crossed the line. That could be important to you. Here's a good indicator. On 2 days ago, we had, on Thursday, looks like, we had some institutional buying because it's way above the average. Now, typically, if you look at the indicator over here, this particular day, and keep an eye on this information right here in this particular bar. On this particular day, we had the 10,319,000 shares bought and sold, and the average, as you indicates here, the average at that particular time was 4 million. So we had substantial amount of purchases. Here on this day, we had 5 million shares versus 3.8 million shares bought. So what I'm looking for all the time is stocks that are trading somewhere in the $1 million range. It looks like $1 million, or as little as $500,000 or 500,000 shares. I'm sorry. Get this right. And let's go down here to let's go to Caterpillar, for example. We haven't looked at CAT for a while. Here we've had some good movement in CAT here for the quite some time. We've had CAT starting to move here to end of May above the 50 and the 200-day average. So this would have been a good time to get into that stock. Let's get this back in relation to where it belongs. Go back to the rectangle here. Good opportunity to buy into and stay into it because it never came back down to the 50-day line. There's a little bit of a pullback and it's still up. So all this time you could stay in that stock and have in this particular case, you'd still be up about 27% here in 69 trading days. So once again, what I'm looking for is 500,000 to 1 million shares traded per day. And then if I start seeing increases taking place, for example, here, 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 and we're starting to get back into the average volume. In this case, I'll start paying attention to that particular stock. Let's see what else is on the line here. Let's look at American Express. No, I'm not interested right now. Volume is drying up. Stock is moving down. So when a stock moves up, we have buying. When the stock moves down, we have selling. And what else do we have up here? AIG, for example. Opportunity. There's an opportunity right here. Thursday, we had an average of 2.9 million and we traded 4.4 million shares that day. That draws your attention to this stock. You can check the news. Why did it move up? Was it good information? Was it politics, or was it a new CEO? Something indicated to some investors on Wall Street to buy heavily into this one. So keep an eye on it. If it would go above this particular point in time, for example, come Monday, it would really draw attention to me. It would really draw attention, and I would want to buy in just above the closing here on Friday. So if the volume moves up above normal, that's a good indication that we're still buying heavily into this stock. It's just like the law of supply and demand. If there's very few shares out there, but a lot of people want it, the price will go up. If you're bidding on a price on a car or a house and more people want to buy it, the price will go up instead of coming down. So hope this helps you. Look for stocks to add to your watch list. This one in particular, as we were watching, PCAR, that's going to make a move. It's starting to move above the 50. It's above the 200. We're getting volume here you see at the bottom, above the average. So we're going to break through this particular sideways movement just any day now. But I would really keep this on the watch list and make a move somewhere around 86. These are not guarantees. I'm not telling you to buy it. I'm just telling you what I'm going to do. 85, 86 neighborhoods when I get serious about buying a few shares to start with. So I hope this has been helpful to you. Click the like button below and the subscribe button. And until then, we'll show you the next video. We'll add more information as we go along. So this is the Trading Channel saying best of selling to you, and I'll catch you next week. Thanks.